Well, hi there, and welcome back to another episode of Let's Talk Real Estate Investing. I'm your host, Sharon Vornholt, and I'm so happy you're here today. I got a reader question a couple of days ago about real estate investing strategies. They wanted to know, basically, how do you choose one, and is there a way to combine all the different strategies into one business? And my answer was yes, there is definitely a way to have a mix of all of the strategies. So the ones we're talking about are wholesaling, fix and flip, and buy and hold. Now, investors often pick one and they think they're stuck with just that one strategy, or they focus on just that one strategy. So I wanted to take just a minute and look at all of these strategies. Now, with buy and hold, they're going to be focused on passive income, but there's also depreciation. There's also the equity that gets built up in the property over time. But for today, you need to be focused on passive income. If that property doesn't cash flow, then it's just a drag on your bottom line. If there's no money when something happens, then you're going to be coming out of pocket for that. Now, if you're a fix and flip investor, you're going to need more money to get into fix and flip. You're going to need access to cash, and that might be bankers, it might be some of your own cash, it might be a private money lender, but you're going to need the ability to generate money for these deals. Now, that, like I said, that can be done a number of different ways. So if you don't have any money and you don't have these relationships built and you don't understand how to look at the cost of a fix and flip, it's going to be a hard road to go down as a brand new investor. Now, when it comes to wholesaling, it's often said that you can get started with little or no money down, and that's true. You can do it with no money. Is it easy that way? No, it's not, because you have to depend on driving for dollars or some similar types of things like cold calling, ways of getting deals, of generating leads that don't require you to have any money. But a good wholesaler is always going to have some money for marketing. That's how they generate their leads, and that's what makes their business run. So think about that. Now, when you think about all of these strategies and combining these three strategies, you can see where, if you decide you want to be a buy and hold landlord, when you buy the property, it's likely going to need work to get it into tip-top shape to rent. So that's where you're going to need to know how to buy a property at the wholesale level. You're going to need to know how much to offer for the property, because you make your money in part the day you buy the property. If you don't buy it correctly, if you pay too much, the greatest renovation on the planet won't overcome that mistake. So you have to know that. You have to know your numbers. That's from the wholesaling perspective. Now, for the rehabber side of it, you've got to know how much it costs to fix this property. What are the costs for materials? How will you know if your contractor is giving you a good bid if you don't know the cost of things, if you don't know the cost of materials or the cost of labor? So regardless of your strategy, if you're going to buy a property and fix it up for buy and hold, you have to know the things that many rehabbers would know. Like I said, you have to know how to buy a property right too. So you can definitely mix up these strategies and use a mix of all three. Now, if wholesaling doesn't appeal to you, and it won't appeal to everyone, because you do need to make up a buyer's list, you need to find some people to buy your deals. I would encourage you to think about it a little bit differently and think about what you can do with that quick cash, because wholesaling is quick cash. As I said, it's a matter of you find a house and you sell it to another investor. You're selling that contract to another investor for quick cash. So if you're a buy and hold investor, you can build a nice little nest egg of cash to have on hand for when your something goes wrong in your rehab. Something costs you a lot more than what you thought it was going to cost you. You can also take some of that money, that it will be earned income, but you can take some of that money and you can pay down your rentals. You can have an additional fund where if you have a month or two of extraordinarily high expenses, sewer line problems, or furnaces, HVAC systems that go out in multiple properties, you'll have the money to withstand that until you can get your accounts back in balance. When you are marketing for deals, and this especially, well, this applies to anyone who's doing marketing like direct mail marketing or any type of marketing that you're likely spending money on. If you find a lead and it doesn't fit your portfolio, find a way to make money on that. Pass it on to another investor, because the truth about marketing is, even with the best list, you will get properties that don't fit your investing criteria, that aren't a fit for your portfolio. So figure out a way to make money off of those leads some way. Now, I remember I talked about a buyer's list. If you're not a wholesaler, you still need to know who's buying property in your area. You should belong to a real estate investment group in your area, and that's where you'll find those people. So to answer the reader's question, yes, you can mix up these strategies. You can be a buy and hold investor or a fix and flipper, and you can still put wholesaling to good use in certain instances. But regardless of the strategy that you choose, you need to know certain things. You need to have a clear understanding of your market today. Now, that doesn't mean a couple of years ago or 10 years ago. The market is very different today than it was after the crash in 2008. Is your market a buyer's market or a seller's market right now? You need to know the answer to that. You need to know what the median sales price is of a property in your area. Those are all things you need to know. You also need to learn how to minimize your risk in any deal. Some of those will be legal protections. Some of them will be a matter of educating yourself, but you need to find a way to minimize the risk, I'll say, in case something goes wrong. And going back to wholesaling properties and building up a fund of extra cash, that's one way to minimize your risk. Your personal financial situation is by having additional money in your business. Now, you have to know how you'll make money on this property the day you buy it. And it's a good idea to have multiple exit strategies. Now, what do I mean by that? When the day you buy the property, you should say, my intent is to make this a rental property. This is just an example. My intent is to make this a rental property. But once you get into it, you find out that there's something terribly wrong with the property. You're going to have to put more money into it, and it no longer makes sense as a rental property. So always have multiple exit strategies. So I hope that helps answer the question. There are many different ways to make money in real estate. There are so many ways to make money in real estate investing. So understand the strategies, learn about the strategies. You should become a master of one, but understand the rest, because they all really do fit together. And I wanted to thank Cindy for sending in that question. I do appreciate it. And this is just a short episode, but let me know if you have a question. You can send that to Sharon at SharonVornholt.com. And be sure to head over to the blog, the Louisville Gals Real Estate blog, where I have several different freebies for you. So check it out, and I'll put the link in the show notes. And thanks for listening. I'll see you same time, same place next week.